Welcome back to Price Action Trading series from Market Secrets. This is episode 45 of the series, and in this episode, we are going to talk about more facts about SD range. Before we get into today's session, I'd like to highlight that Market Secrets had recently launched algo trading using Python. So if you are someone who is interested in learning algo trading, you can enroll into our program. I'll leave the link to it in the description section of this video. And with that note, let's jump into today's session. More facts about SD range. We consider bigger time frame supply and demand SD ranges as daily, weekly, and monthly charts. If trading long term, even 3-month and 6-month imbalances and SD ranges are very important. You need to remember that. So, you need to go one bigger time frame than your trading time frame to get the proper SD range. Number 2, continuation patterns won't be used to measure SD range unless price is trending in the direction of the CP. So if you're seeing CPs, you can't directly use it to measure the SD range unless the price is trending. If it is a sideways market, you cannot use the CP to measure the SD range. Number 3, CP patterns will no longer be used as part of the SD range once the trend line is broken. So in such cases, an extreme valley or peak that was origin of the imbalance of that particular time frame will now be the zone in control. So you can use CPs as long as the trend line is intact, and if the trend line is broken, then you can immediately switch to the extreme valleys and peaks on both the sides of the price to identify the new SD range, because a new zone will now be in the control. And most importantly, don't diddle in the middle. If the zones you have detected are in the middle of the SD range, that is around 50% of the retracement, price could probably go either way. So skip those levels to avoid unnecessary losses, or wait for the momentum to the either side to trade with a brand new daily trend and momentum. Apply multiple time frame analysis in order to assess the odds of the level you found in the middle of the SD range. Diddle in the middle normally matches a 50% Fibonacci retracement, and it is also used by many traders to set their targets. So don't enter at the place where other traders are exiting. So moving on to the next point, the higher the time frame, the bigger its reliability. If we have a weekly or monthly supply zone, even if that zone is not fresh and it has been tested multiple times, the zone is still in control, and you need to respect the higher time frame zone. They will hold much longer than a 15-minute time zone or a hourly time zone. Why? Because the smart money, the institutions, the big fishes will be looking forward to position themselves on the higher time frames. They'll probably not be looking at a 5-minute or 15-minute time frame to fill the order worth millions. Maybe some might, but most likely they just don't care much about lower time frames, moving averages, RSI, CCI, MACD. Most of these big traders are not scalpers or not even swing and positional traders. So why should they care about filling orders in the middle of nowhere? They are the market makers and they know what they are doing. Remember, they buy low and sell high in the supply and demand SD range. Trade with the trend for higher probability. The price do not move in a straight line. SD levels will work in both the directions at any given time frame, with or without trend. But in order to trade with the odds on your side, you would better trade with the trend until it ends. But where will it end? Normally near or at higher time frame supply or demand area. So when price is too high or too low in the SD range, you can consider that the trend is at its end. So ride the trend. So trade with the trend for higher probability and exit when the trend is ending. And now, avoid unnecessary losses by trading against the trend in the middle of the SD range. If you avoid this, your profit and loss ratio will also be much better. You will definitely miss many trades for sure, but you will filter out many losses as well. And lastly, decide if you want to be a hero by trading counter trends at middle, low, high in the SD range, or just want to go for the safe way by buying the dips and selling the pullbacks in the direction of the bigger picture trend. So it's your call if you want to take the counter trends trades at the highs or lows or in the middle of the SD range. It's your call, or you can just trade in the safe way by buying the dips and selling the pullbacks in the direction of the bigger picture trend. So it's your call. And with that, I'm ending today's session. If you like this session, hit the like button and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.